June CPI was recorded as 6.26%, which was lower than the consensus estimates of 6.7%. June CPI data was even lower what was recorded in the month of May. From 6.3% in May 2021, it actually came at 6.26% when May 2021 was the highest recorded since November 2020. So minor correction from the highest levels and some sign of a relief when we see that the macroeconomic indicators highlighting. But let's know what the brokerage firms Credit Suisse and CITI estimates for the CPI inflation data for the months ahead. Firstly, let's take up the view of Credit Suisse. Then Credit Suisse says that the headline CPI inflation this time remained largely unchanged on the month-on-month basis, but seasonally adjusted, the month-on-month momentum in June was lower by 0.3 percentage points versus the average that has been seen in the past 10 years. So giving some of the highlights in the data this time, then the fall in the core CPI was broad-based, which was led by the personal care and pan and tobacco. Food inflation rose 34 basis points on a month-on-month basis, driven by the sharp rise in the oils. The also rise was seen in fats, but this was somewhat offset by the fall in the eggs, meat and fish prices. But the vegetable prices continue to surge from 5% jump that we saw in the month of June. The July also saw a rise in the vegetable prices as well. But looking ahead at the current prices, Credit Suisse is of the view that the lower duty on the palm oil and the food CPI can ease to 4.5% in July from 5.15% recorded for the food CPI data in the month of June. It may actually normalize by around 75 basis points, and going ahead, MPC is likely to look beyond the Q1 data this time. The year-on-year trend should moderate, but going forward as the highest base kicks in for inflation. On the other hand, let's taking up the view of CITI. Then CITI this time says that the headline CPI inflation remained broadly unchanged, and they think that the sharp drop in the core inflation has been seen on the sequential momentum. Similar easing of the inflation momentum was seen after the first wave of the shocks too. They retained their FY22 headline CPI inflation forecast at 5.9% on the YOY basis, and no major changes is expected at the August RBI MPC meet as per CITI. So these are the take from both these brokerage firms, where they expect that the one is expecting that the food inflation will normalize in the month of July itself. It will see some kind of a minor dip, and the other hand, CITI is estimating that FY22 headline CPI forecast will be at 5.9%, and they are sticking to their view.